In today's interest rate markets, let's focus on the 10-year note. Big rally today in the 10-year note. Strong run out as we saw equity markets come under some further selling pressure. The 10-year note pushing up right around the 130s level. So again, this is a level that it hasn't attained in a few weeks actually, and so we're seeing some volatility persist in the interest rate environment. And now we're seeing again some buying coming back into the market. Really, you look at all the durations; they were up quite significantly today, with yields being pushed lower. And the dynamics within the structure of the 10-year today, I think you've got to look right at the trade situation. That was the uncertainty that re-entered the market here, has been creeping back into the market really since over the weekend, and particularly Monday and Tuesday's action, where we saw some strength. And particularly in yesterday's afternoon into today's session, where we saw, again, some selling pressure and the market structure, and with that we saw some buying pressure on the bond market. And I want to point out that when you look at the 10-year price action, the negotiations are definitely one thing that the market's very concerned about. Now we're heading towards that December 15th deadline. And so there's that front, and also this leads back into the concerns about growth. Now, yesterday we had some PMI numbers that were pretty positive across the globe. But the ISM numbers here in the United States are a little weaker than expected. And now with this negotiations basically taking center stage and the dragging of the final chapter of phase one, however you want to look at it, that's definitely a concern now, and it's going to be a concern about global growth. I see that creeping back into the market structure today, and that's another reason why I think you're seeing the 10-year having a significant rally today. Looking at yields, we're seeing basically the 10-year pushing back down to the 1.70 level. Actually traded slightly below there intraday, and that's a big reversal from what we just saw yesterday, where I think we saw the high yield yesterday of 1.87. So a big volatile reversal after yesterday morning's action, and again continuing to see this downward pressure on yields. If we break through 1.70 and close below there, you'd have to say 1.50 comes back into the play. And again, the dynamics within the market structure are indicating that things are pretty fragile still when you think about the interest rate environment, particularly when you see the reaction that we're seeing to the idea that maybe the trade negotiations will drag on longer than expected, and that puts the Fed back into focus, and that puts growth back into focus. And I think that's why you're seeing the reaction that you're seeing today, where you're seeing money come out of the equity markets and most likely headed into the bond markets.